What's up, what's up, what's up? It's your man, ChazzEllis, once again, and you're listening to the ChazzEllis Podcast. What is the ChazzEllis Podcast? News, celebrities, interviews, fun with your man, ChazzEllis, the real and honest perspective on current events, politics, sports, and everything in between. Learn about life, love, and the truth with your man, ChazzEllis. What's up, what's up, what's up? It's your man, ChazzEllis, once again, and I'm with Krystal Todd from the Cash Compass. She's an accountant, not your accountant, but she's gonna give us a lot of information here today. It's gonna be really good. Do some research yourself also, but you can take this and get yourself started. How long have you been an accountant?
So I've actually been an accountant since 2015. I started as an auditor with a big public accounting firm, which got old really quickly because I was working nonstop. But once you're in that field, it's actually surprising how people even in that field don't really have the kind of financial education as you think that they would. So I started off in 2015. I kind of moved around to different companies, and I was still seeing the same thing where it's like we're not really financially literate. And just from between talking to my friends and just being at work, I realized that there was a need to just kind of explain a little bit more about finances beyond what you would normally hear. So that's how the Cash Compass was born.
So were you auditing like smaller companies or big companies?
It was public accounting. So it was a mix of public firms that were actually on, the stock exchange and some smaller firms as well.
You said there was a lot of financial illiteracy, and give me some examples, like something like one of the most egregious things you saw, something that was just crazy.
I just think people being completely misinformed, even about credit cards, which is, I'd have a discussion with my coworker and they're saying, well, yeah, I keep a balance on my credit card because that's how you build your credit. And I'm like, what? No, that's absolutely not what you have to do. Things like that, things like just buying like a house just because it's the right thing to do. And it's like, you can actually have your house paid for by somebody else and still own it, so there's other ways to get what you want without having to, be house poor or be car poor, where you own the house, but you don't own anything else. So just things like that. People being frivolous with their money. You think that if you're earning a higher income, you're probably more responsible with your money, but not so much.
Yeah, I get that, because actually I used to sell cars, and that's one of the places where I learned that no matter how much money people make, they can still find themselves in the same debt.
Absolutely.
Same bad situations. It has nothing to do with financial literacy. It's
At all.
earning power.
Yes.
That's why people who play basketball and football go broke a lot. Yeah. They got earning power, but it's not necessarily financial literacy going along with that.
Yeah, what I like to say is it's not what you make, it's what you keep. So
yeah,
you can make as much as you want to, but if it's going out, you're not doing anything.
My dad used to say that all the time. Okay, so since you're an accountant and tax time is right around the corner,
oh boy,
I gotta ask, do you recommend that people do their own taxes?
So if you are just a W-2 employee, you don't have a house, you don't have any investments, you can probably get through it yourself. TurboTax is pretty good at walking people through the process. When you have your own business, even if it's a small business, I think a lot of people don't really reap the full benefits of having a business. But if you have your own business, it's definitely advisable to talk to a C.P.A. Or just some sort of tax preparing company, because they'll kind of find you those credits and those deductions that you deserve, that you should be getting, right? Because some company, like people were getting mad because Trump was paying, allegedly, I don't know what happened, right. But allegedly, he paid $750. And if that's true, I'm assuming it's legal, right? So that means that we can do something similar too. You have to just know what the tax laws are and be able to take advantage of them. So yes, so if you are a W-2 employee, it's not complicated. If you have your own business, if you don't want to take the time to look it up yourself, then get some help, because there's a lot of different deductions you can take just from even having a cell phone or your car. I mean, you can deduct a lot of things, which is why people who are in business do so well, because a lot of things are deductible.
Yeah, and I like to add, you tell me if I'm wrong here, if I'm right. If you can find a way to be in business just for tax purposes, for the fact that you can save yourself a lot of money, try to do so. Yes. Try to give yourself an opportunity. Certain things.
Absolutely. Yeah, a business is a tax haven. And of course, it's your own pride and joy. So you kind of get that benefit from just really putting in all the work and getting all those dollars coming back to you, right? Because your employer is never going to pay you what you're worth. They have to make a profit. So they're going to pay you less than so they can actually make their own money, and you want to have your own business so you can do the same. Like every dollar that you're getting is because you put all that work in.
Absolutely. I agree 100%. A lot of times we're taught to be angry, like what you talked about with Donald Trump, allegedly.
Yes.
But what you talked about with Donald Trump, people hate the player. I say, don't hate the player, understand the game.
Exactly. I'm such a
If
big fan of that.
if he did that, if he was able to do that, then and he was able to legally do it, what are you mad at? Figure out how
Right.
you can do the
That
same.
means we can do it too. Right. So you can cry all you want to about the tax law and how it's not fair and the rich get richer. But, I don't see that changing. I don't see them saying, you know what, guys? Yeah, you're right. Like, let me just give all my, no, they're not going to give all that money away. So you have to figure out how to get up to that level. And it's by having your own businesses and having real estate and just kind of using it to your advantage.
You got a couple of tips maybe that you could give small business owners to save money at tax time?
You have to keep a record of everything. And obviously, the IRS, they can contest whatever they want to, but you keep a record. Like literally think of everything that you're doing in your business. If you have like a designated space in your house, you can deduct that portion of your house off as a tax write-off. So don't think just because you have like maybe a smaller business, even as a YouTuber, if I have a designated area in my house, that can be a write-off. My utilities can be a write-off. Think about everything you do, even if it's only a fraction, even if you're using your phone just for some sort of business call, you can deduct that. If you took a trip and had a business meeting, you can deduct half of that trip cost. So, you have to learn the tax laws. It's really good to not be cheap and especially if you're serious about your business, right? Invest in somebody who's going to actually help you plan, because there's certain things you can do to make sure that, okay, I'm going to buy this car because for sure I'll be able to depreciate it. So even though it's for my business, I'm going to be writing it down every single year, and that's going to have some tax savings, attached to it as well. So you would really want to get a tax professional or just look it up. I mean, we have like YouTube University, or we could just go online, and obviously not everything you see is true, so you got to fact check it. But you have to really look at everything that you're doing in your business and see if you can deduct it, because you probably can.
And I want to go into what you talked about with depreciation a little bit, because I know that some of the listeners that are going to be watching right now, there's going to be crossovers, so some of them may not have heard of that. When you buy things, automatically they depreciate, which means they become worth a little bit less, and you can actually write that off on your taxes. There is a reason to buy things for your business. Some people are just a little too cheap, and they think that's how you save money, by not putting or investing in yourself. But if you're not investing in yourself, you're not saving money.
And if you have a business, if you were to just buy that car right out, just for just for your own personal benefit, you can't depreciate anything, right?
Right.
If you can find some sort of business purpose for it, then you can deduct at least a portion. It's everything is in portion. So it's not like if you make a phone call, you can deduct your whole, cell phone bill.
Right.
I wish it was
Absolutely
like that.
not.
But
Right.
it's still something, right? So it's like, I don't care how petty it is. If it was about your business and it helped you make money, deduct it. Everything get petty, because that's what they do.
Absolutely. It's funny how people will be real petty when it comes to splitting up a check or something like that. Wait a minute, I didn't even
I
have
ain't eat that. I only had water. Yeah.
But when it comes to their finances, a lot of times they just let everything go. Why do you believe that? Because this really isn't taught in school. It's not like they have a tax prep class. It's not like they have a start your own business class. It's not like they have financial literacy at all, how to balance a checkbook,
No, you on your own.
nothing. Why do you think that is?
I want to be thoughtful in my words, because I don't want to sound cynical or anything, but we have had education for, centuries. And you would have think at least across one of the 50 states, somebody would have thought about it, right? So it almost seems intentional, and I don't want to make it seem like the school system's out to get us or the government, because like a lot of people can say a lot of crazy things, but it does seem intentional, because there's no reason why I was poking a dead frog, right? But I have no clue about the monetary system. So
Right.
it's one of those things where, and it's not even just financial literacy too, it's a lot of skills that I think we would need, like sales. No matter what, if you're a W-2 employee or if you are having your own business, you need to learn how to sell and how to communicate effectively. You can't even go on Instagram right now and have an opinion. Everybody's going to curse you out, right? No one knows how to communicate. So it's communications, it's sales, it's finance, it's like, financial literacy. These things are intentionally kind of left out. And if you have the money, right, like if you can afford a therapist, you'll learn how to communicate better. If you can afford a CPA, you'll learn how to manage your finances. But they don't really want to give that information out for free. I don't have the answer as to why, but it's intentional to me, because I think we could have at least put something in there. Just as we have science, for all these years, we should have financial education for all these years as well.
We got geometry, but
Right.
we didn't get anything as far as, I remember actually, and if you ever watch any of my videos, you'll know that I had a million different jobs. One of them was I actually used to be a police officer. And I remember when I was in the academy, the craziest thing was I started learning about the laws of the state that I lived in and the city that I lived in. And it was incredible because I was like, wow, they never even taught us about the laws of driving a car in school.
Yeah.
Like just something that you have to do every single day, or just the law of owning a piece of property and what it really means to own a piece of property, that you're really more of a conditional owner. And, that your property can be taken for different reasons. These are things that you don't learn. And I was like, wow, how did you go through all of this time in school? And even if you go to college, unless you take that particular major, you're not going to be in a situation where you're actually going to even have the basic information to function.
Exactly.
And I think it has to be purposeful because they have to know that you need that information to function.
I don't know what their motive behind that is. I guess, if you want to put the work in yourself, you have to, that's really all it amounts to. But it's unfortunate because if we had at least a base, someone to actually plant that seed, and you can kind of understand that there's more to life than just, brunch on Sundays and YOLO, we would be better financially.
So what are some of the steps for wealth building when you don't necessarily have money and you don't have good credit?
Right. So for those who don't have money, you have to focus on getting a higher paying skill, right? Because before I became an accountant, I was working like at a bank, or I was working in retail. You can definitely climb up, but it's going to take a little bit longer to get there. So you have to get a higher income skill, and you can't just say, oh, woe is me, like the world's against me. No, go out there and get a skill and get better with it, okay? And as far as bad credit, if you can just, like, obviously times of the essence, but worst case, like if right now you were like, listen, I need to go to bankruptcy, I can't afford it, whatever, in 7 years it's going to be a distant memory. Okay, I know people personally who have filed bankruptcy and now their credit score is in the 700s and they're okay. So you have to kind of assess how bad of your financial situation, like how bad is your financial situation. If it's something that you can kind of just make payments out of, I always say the most important thing to do is get out of debt first. I know people will tell you to invest, but paying off your debt, especially credit card debt, is a guaranteed return. If your credit card is 15% and you pay it down, you have gained 15% of your money back, essentially, right? Because you're not paying them anymore. So it's a guaranteed return. So try to just pay down your debt as much as you can. If you have somebody who you trust, who has really great credit, you can do what is called become an authorized signer on their credit card.
And talk about that because
Sure.
that's something a lot of people don't know about. And you probably got an auntie, a grandma, or something like that who has great credit history with a card. But go ahead and go ahead.
Right. So it's the best of both worlds, right? Because it allows a person to help you without having to really put their name on anything. So basically how this works, and I've done it, so I know for a fact that it works. You have somebody who has maybe 100% on-time payments, somebody who's responsible. Don't ask your cousin and your cousin be balling out, right? So what they'll do is they'll add you on their credit card as an authorized signer. If they don't trust you, they don't have to give you the credit card, right? The purpose is just to build your credit. So once you become an authorized signer, all their activity pretty much gets transferred over to your credit score. So in my situation, I helped somebody that I know and I put them on my credit card as an authorized signer, and their credit score shot up because obviously this person had bankruptcy in their past. So to have really good credit, long, 100% on time payments, it will improve your credit score. That would allow you to get a better rate when you're going out there looking for any type of loan that you need. So that person doesn't have to do anything. And at any point, if they want to, they can remove you from their credit card. So let's say you're looking to get a car. Have them put you on, wait a month so it can actually process, and then go out there and get a car, and you will get a better rate because obviously, hopefully, if you've done it right, your credit has improved because this person has considerably better credit than you do. And then you can get your card, and if they want to take you off afterwards, they can. But they're not liable to make any payments. If you don't pay your card the next month, they have nothing to do with that. So it's really a great way to kind of both people benefit.
That's good information too. I'm glad you brought that up because a lot of people actually have been doing very well with their credit, even though they may have started from a poor environment. And now you may have children, you may have people who are turning 18 right now, and this could be a good opportunity for you to let them not have to start from zero. Or like I always say, most of the time people don't start from zero, they start from like negative 5 or something like that. Because some of us come from an environment where people put stuff in your name and things like that. So I know people who start from in the negatives. So this could be an opportunity for you to give your kids like a better place to start. Exactly. Give them some credit so they can live like the rich folks.
Right, because it's the power of leverage. And I know, of course, people always tell you get out of debt, but it's the bad debt, right? It's the credit card debt. It's
absolutely. Yeah.
I don't know what kind of store credit cards you have, but when you're getting into debt for a business that you've already calculated, it's bringing income in, then that's actually helping you grow, right? Because if I want to buy, I live in Miami, so if I want to buy a property here, I would have to have like $250,000 at least saved up if I want to buy it in cash. Obviously, like people don't really have that kind of money, right? Like I'm gonna be the first one to tell you, I ain't got that. But if you put down a small percentage, right, it allows you to actually get into this larger property. Maybe I could put down $30,000 instead, and now I control this $250,000 property that I can rent out and make income from. So that's how you're using your credit responsibly. So you're not getting better credit so you can just go buy a whole bunch of things that are not going to make you money. It's so you can get your business going, so you can get into real estate and build your wealth that way.
So don't get your credit up and go buy some J's and gold chains and whatnot,
Well, the gold chains maybe if it's like 22 carats, that's an investment.
So you can. No,
that's not a financial advice.
I'm joking because I actually have a different philosophy on even things that people buy. I was talking to a friend of mine, and we were actually having this conversation about people buying J's, Jordans. We were having a conversation. I was like, well, say it was 1985 and we both had $57, which is about what it cost to buy a pair of Jordans in 1985. You put your $57 in a shoebox. I'm a sneakerhead. I buy my Jordans for $57, wear them once or twice, keep them pristine, and then put them in a shoebox. We both open our shoeboxes today. How much money do you have and what do I have? He was like, well, I got $57. I was like, you don't have $57. You had $57 in 1985 where you could buy a pair of Jordans.
Right.
Now you can't even buy the shoestrings for $57. I got a pair of shoes and you couldn't go out there with $57 and say, hey, man, let me buy a pair of 1985 Jordans in pristine condition. They're laughing in your face. So it depends on what you buy and depends on how you buy it and what you're planning on doing with it. Saving money is kind of one of those things where you got to look at it like, if you're not investing, then you're not making money. If you're just putting the money somewhere, it's becoming worth less simply because things get more expensive. Inflation is a real thing. Is there some things that you just shouldn't buy?
I think it just depends on your tax bracket, right? So if I'm a millionaire, I can buy $1,000 purse because it's probably not going to, make any dent in my finances. Right. So it depends on where you're at because, of course, life isn't all about, just save, don't go anywhere, be super strict. You have to have a balance in anything you do. So I think you have to assess your situation. A lot of people will say if you can't buy it twice, you can't afford it. If you can't afford it, like if it's giving you anxiety, if you have to move money around from here and there, like maybe you should just sit this one out and wait till next year or whatever. Like you can still get what you want, but it's just maybe you have to wait a little bit. And delayed gratification is what people have a problem with. Like, no, they want the trip now. They want to go to Tulum right now. They want to go buy them Jordans right now. If it's not going to put you in a bad spot, if you're not going to be taking out your rent money to pay for that, then in moderation. But I think it's about your priorities. You should really want to be debt-free first because that's what's going to keep you shackled down.
That's really interesting that you said that about paying debt off. Because my dad used to always say, you don't have money until you don't owe anybody money.
Right.
Basically,
that's a good one.
People will get money, they'll borrow money. And this is even if you can't borrow money from banks. They get paid and they forget everybody they owe. And I want you to go into that a little bit because tax season is coming around. I think this is, for a lot of people, if you get big tax returns, I feel that this is a time that is often wasted where a person could actually improve their situation drastically. Maybe you could give us some tips and some things that a person could do to improve their situation.
Yes. So if you are someone who gets a big, tax refund, it's going to be unfortunate to have to maybe put all of that into paying down your debt. And maybe you don't have to do that. Maybe treat yourself with a little bit, like maybe take 10% off and take care of yourself. Go get an ice cream or something. But then, but actively really work on paying off your debt, because a lot of people don't really realize how much of a burden it is until they become debt free, right? So you might think this is normal, but once you really see like, wow, okay, this credit card is almost paid off. Like I won't have to make this payment every single month. I think that's when the mind starts to shift. So you have to be disciplined as much as you can and really understand that things might even get worse as we go on, right? There's so much uncertainty with this coronavirus. What if we have another lockdown again? You don't want to owe people money when you can't even go to work. So I urge people, especially right now, normally I'm not want to tell you what to do with your money, right? You do what you want. However, any extra money, any bonus money, any extra checks, right? Some people get paid bi-weekly. So you got an extra check maybe in October, maybe you're going to get it coming up soon. So don't spend the extra check. If you go 10 months without having it, then apply it to paying down your debt. You have to get creative. Any extra little bit of money, you have to apply it to getting down with your debt. Or if you are debt free, then think about, investing it into either, if you're into the stock market or if you're into precious metals. There's a couple of different things to do with your money, but just sitting in cash is not necessarily the best thing because of our money depreciating, so rapidly due to inflation.
I'm glad you brought up some stock market stuff. I actually watched a few of your videos where you talked about the stock market. I've always been a little skeptical of the stock market for some of the reasons that you talked about, but I would like for you to give people some of the pitfalls of investing in the stock market. And is there a way to do it safer where you might be able to be in a better situation?
So I think we've kind of migrated away from traditional investing back before I was even born, at least from what I've looked at. People used to take, companies' financial statements and they would say, okay, this company's making a profit. They have a lot of assets. I like this company. I see a future with this company. So they'll put their money in there. Now we in the world of Robinhood and all this like quick stock, it's all about just catching the next fad. It, to me, has become more of a speculation rather than, okay, I like this company, I trust this company, and I see them doing great things. And that's unfortunate because I think that's when you're really making an investment, when you actually see potential in a company and you're putting your money into them for that reason. A lot of people will tell you right now, oh, just get like a fund, just get like an index fund and just don't worry about it. But rich people don't just put their money somewhere and don't worry about it. Like they're actively moving their money around, but they'll tell you, yeah, just like let it sit there for 40 years and come back and hopefully it's, you're doing better. No, most people who want wealth, they're actively managing their money, right? So if you want to get into the stock market and you are skeptical, well, then you can just take baby steps, right? Don't just throw your money into a fund. I am the type of person that if I don't know what I'm talking about, if I can't explain to you what's going on, I don't want to put my money there. Because at least if I make a mistake, I know from my own experience, right? But if someone told you to do something and then all of a sudden your money goes to zero, you don't even know what happened. So pick a company that you like and look at their financial statements. Like, are they making money? Like if you're putting your money into Uber, for example, they haven't made $1 yet, right? They have revenue, but they don't have any profit. So would I want to put my money with you guys? You don't even know how to manage your money, right? So get comfortable with learning these businesses and how much money they're making. So when you're making an investment, it's not just based off of speculation or oh, Tesla's going up, but get Tesla. You're doing it because you actually know what you're talking about. You like this company, they're profitable, and for reasons like that. So I think if you're going to invest, think of it as something you would invest in your own life, right? Like if I wanted to get a new car, I make sure it's reliable. I make sure that I can make the payments. Like you're putting more effort into it. So do the same thing with your money too.
What you just talked about, I know a lot of people who are trying to get involved in stocks and everything. And I'm like, well, you just talked about actually taking a look at the real company itself and figuring out what's going on with the company. Is it a good company? Are the people good? Is the process good? That's what Warren Buffett does. People always bring up Warren Buffett. Well, he's made so much money off stocks. Yeah, he actually goes through financial statements.
Yes.
He actually takes the time to figure out exactly what he's investing in.
Right.
I believe if you're trying to follow the next wave, if you are a regular person, by the time you hear about it, the wave is over. It's on the downturn.
Absolutely.
You know what I mean?
You're gonna
Otherwise, you wouldn't know about it.
Yeah. Yeah, they always say if you hear like like somebody, no disrespect, but like maybe somebody who's like working at McDonald's or something talking about a certain stock, that's how you know like, yeah, this is spreading everywhere, right? Because
right.
now
the
it's just
market
like
is saturated.
Yeah, exactly. So that's a downfall if you don't know what you're doing. And if you have studied the company really well and the stock happens to take a dip, because that's what happens, you won't feel that fear, right? A lot of people just kind of throw their money in there, and then when they see things going down, they panic because they don't know about this company. So they don't have any faith in the company. So now everybody's panicking and trying to just rush and sell. But if you know that you're making investments based on, like statistics, the business model of the company, if it goes down, you're not going to be as bothered because you have faith in the company.
I'm big on investing in what you know about.
Mm-hmm.
People talk about investing a lot, and then something becomes a fad, and everybody's like, "Oh, let me get into Bitcoin. You should put your money in this." I'm like, it may be the greatest thing going, but I don't really know about it. I believe in investing in things you know about, because there's a dude that is actually investing in shoes who's making $1 million because he knows about shoes.
Right.
There's a dude investing in baseball cards who knows about baseball cards, making $1 million.
Mm-hmm.
That's got to be what you do, is know about something and then invest in it. Are there some things that are not necessarily traditional investments that people can invest in that you would suggest?
Yeah, so I have to just throw this out there, not financial advice, but I particularly like precious metals, so gold and silver, which is why I was alluding to, like, well, if you want to buy, a gold chain, you could do that. Um, Gold has been around for, I mean, thousands of years, right? And so
Right.
has silver. I think, now, unfortunately, we don't have much exposure to that. So if someone tells you to go buy a gold coin, you're going to be like, what? Like that sounds like something, from the ancient times. Like, so, but those are the only asset classes that have stood the test of time. Okay. All fiat currency, which is our dollars, it's just paper money, right? They just kind of print it when they need it. There's nothing really holding it back. Every single fiat currency has gone to zero. There's been like 4,000 of them. They've all failed, right?
Right.
I'm not saying that in the US dollar or wherever country you're in, I'm not saying that it will fail for sure, because of course I don't have the answers. But when you have your money in a physical asset, you have control over it. There's no counterparty risk, right? With the dollars, it can go to zero and then you're left with nothing. You're just holding the bag. If you have precious metals, which I like, gold is kind of expensive. Silver, you can get in there. If you have $28, $30, you can buy yourself a silver coin. And you can look at the statistics yourself. I mean, they stand the test of time. So I would say really look into that, because if something were to happen, there's a lot of talk about digital currency right now. Worst case, you have some precious metals that have never, ever gone to zero. Or best case, if the economy does crash and if our dollar does, see its days, you will be in a much better position, because in those times, gold jumps up. Okay, back in 1970s, I think it was about $50 or so, and now it's $2,000. So, that's a great way to have a savings. I don't consider it investing. I don't consider it speculation. To me, it's just wealth preservation. So I have my money in these gold coins. I don't have any intentions on selling them. I'm not looking for, fluctuations in the market to sell it. It's just to kind of preserve my wealth and to kind of bet against the debt, because there's a lot of debt in this world. And if things were to go to crap, then you would see pretty good returns in your precious metals. And I have videos on that because I don't want to lose anybody, but
Oh yeah, y'all, and make sure y'all go to the Cash Compass and check Krystal Todd out and get more in depth in some of the things that we're talking about here. We're just touching on it right here. Make
yeah.
sure you check her out. I actually endorse her, somebody that you should definitely check out. And y'all know I don't be endorsing people. I'm not even that type of dude, but this is somebody I actually listen to myself. So make
Thank
sure you do
you.
check that out. With investing, it's weird because there's always somebody to tell you exactly what you should spend your money on and what you should put your money into. And I'm one of those people who I believe there's different things that work for different people based on how much information you take in and what works for you and what you're good at. How should you go about getting the proper help or getting the advice that you need? Or should you even take that advice?
I think no matter what, you should really gain at least a very basic understanding on your own. It is nice to be able to hire out people and get additional help. But if you don't know what their motives are, you can get finessed, right? So financial advisors, they don't, at least most of them, do not have what they call a fiduciary duty to you, meaning that they don't have to actually work in your benefit. If they see something that where they could put their money in and it makes them more money, they can actually do that versus what might be better for you, right?
Hmm.
So if you don't know that, you might think, okay, well, this person's going to help me, whatever, but they might just be looking for themselves. And they can legally do that, right? They can chase a higher fee to benefit them versus it benefiting you. So you have to kind of get a basic understanding of who these people are and what their motives are, right? Also, I have a video on this also, but when you are looking for help, if you ask this person, a simple question like, how is money created and maintained in the system? If they can't even answer how money is created and what the system is even based on, then, I'm not saying that you can't trust them. I'm just saying they might not have a really general broad understanding of what's going on with the money. They might be just super focused on stocks only, and they might not really care about the other asset classes like precious metals and like real estate, or having your own business. So you would want somebody who's well-rounded, who's literally trying to get you to do the best thing with your money, because sometimes financial advisors tend to just kind of push you into stocks, which are imaginary, right? I mean,
Right.
yeah, you technically own the company, but they can just close up shop and then you're kind of out of luck.
When you talk about stocks being imaginary, I was having this conversation with a friend of mine, and we were just talking. I don't want to name a particular company because I'm not trying to sit here and hate on nobody, but we're talking about companies not paying out dividends.
Okay.
And I was like, a lot of these companies don't pay dividends. So basically, what they're telling you is the only way for you to make money is to sell what they're saying is a valuable asset.
Right.
So if the stock goes up, you only make money if you actually sell it. What do you think about that as far as not being able to necessarily benefit when the company benefits?
That's kind of why I tend to not really favor intangible assets, which is assets that you can't really physically touch, of course, right? Like real estate, you can touch it. It's yours. You have control over it.
You can
Stocks,
touch them
not so much.
Jordans.
Yeah, exactly. And there's a lot of ways to make money. So I know I'm talking about the main asset classes, but like you said, baseball cards, anything. There's money to be made out here, okay? But yeah, so I basically feel like if I'm going to be in the stock market, it has to be dividend stocks, right? Because that's kind of why I don't really care for the 401k model either, because it's like if they're not moving up, if the economy isn't moving up, you're not going to perform well. But there's people who are in the stock market who can make money no matter which way the stock market is going, right? Because they're a little bit more sophisticated. So if you're somebody who's like, okay, I don't want to do all of that, I'm not trying to really learn about all of that, well, then at the very least get dividend stocks, right? Stocks that that they have had a long history of paying out dividends. So at least you can guarantee, kind of, because of course they can cut their stocks too, or their dividends too, but you can at least have an idea of, okay, I should be getting at least 4% back on my money here without having to sell, right? Just I'm getting something coming back to me, because I don't want to sell assets. Like if I have a house, I don't really want to sell it. I want to keep all the assets that I have. So in a perfect world, you wouldn't want to sell your assets if you didn't have to, but you could still make money from it. So I prefer dividend stocks.
I had another question I wanted to ask you. This would be a little more, it could possibly end up getting more ratchet, but I'm going to ask you.
I'm okay with that.
All right. But I want to ask you about athletes, rappers, entertainers, people of that nature going broke. This is something that people talk about all the time. What are some of the major reasons why these dudes just, next thing you know, you make $100 million over your playing time, and now you outside with a sign. What's up?
Right. It goes back to what we were talking about, how we don't have that education in schools, right? And especially somebody who maybe hadn't seen that kind of money in their life. You don't really know where to even begin. And it's also society, like, oh man, he's a baller. Like, you got to have a nice car. They're going to think you're poor if you don't have a nice car, if you don't have the newest shoes. So I just think it's a mentality thing. You're not really managing your money well because maybe you were never taught, or even when you got the money, you're just focused on the here and now. And of course, it's great to live in the moment, sure. But you have to think in the future too. Like, are you going to be playing ball until you pass away? Maybe not, right? So what should you do with your money so that you don't have to go back to a regular lifestyle? I think they kind of get caught up in the whole moment and the image that they have to keep, that they don't even really, they lose sight of the future. So unfortunately, they're just trying to ball out and impress people, which I think even at our level, like I was guilty of it too. Like I would, buy nice things. I would go on vacation, whatever. I'm not speaking like from some sort of, no, I've been there. I've been in credit card debt. Like I've had, so I know from firsthand experience that it's an image and it's fun, right? People don't want to be disciplined. So I think it goes down to that too. Lack of education and no discipline.
I can definitely agree with that. And I think there's also another element in the fact that you help me out if I'm wrong here, but I think that the fact that when you play basketball or football, or even if you rap or something like that, most of the time the window is so small And my dad used to always say, the minute you stop making money is when you start losing money.
Mm-hmm.
So if you stop playing because you get hurt or whatever, or you just, time marches on, the career just isn't that long. Whatever the situation is, a lot of times what happens with people is not even the lifestyle that they've created. In my opinion, it's not even the lifestyle they created, because if you make $100 million, a pair of shoes isn't going to make you go broke. A car is not going to make you go broke. But if you don't have anything that's going to keep you making money at that rate or close to, 20, 30 years from now, then you're completely screwed. I think really the model of athletics, and especially when you talk about rap and that type of entertainment that's really a small window, I think the model just says there's almost no chance for you to keep your money just because of the nature of it.
Yeah, and it that kind of shows where our priorities are too, because of course those that can influence, millions of people, they're getting paid the most, but the teachers who are really, shaping our youth, they don't get paid anything. So our priorities are in people who can kind of, dumb us down. No disrespect to anybody in particular, but, dumb you down, talking about, WAP, whatever else is going on the internet. Just like, look over here, don't pay attention to this. Like, look at this lifestyle, like, look at me.
Right.
So I don't know. It's ridiculous.
But my math teacher couldn't rap though.
Right. So she wasn't even impressive. Yeah, I understand.
Nah. And I do think this also, just to give a little bit of perspective, if you can play basketball in the NBA, you are in such a great minority. And that's how capitalism works. It basically says we have to pay you because you can do something that nobody else can really do. Mm-hmm. People don't realize that if you try to get up and down the court and just run, not score a point, there's probably 2% of the population who could just get up and down the court and run with those guys because they're freaking huge. Right. They're gigantic and they're super fast. And I think that when we look at teachers, if you suck in the NBA, you're gone. It's over.
Yep.
You'll probably never make it that far. You'll play college basketball and you will never, ever get a chance to make $1 playing the sport you love. Right. But if you suck as a teacher, you can get tenure and you could be there for 30 years, not teaching anything. Shout out to some of my teachers. But, just to be fair, I think people get more money when you only get paid if you're great at your job.
Mm-hmm. And that's kind of what I went back to talking about too, because I'm not saying that they should or shouldn't get paid more or less. Sure. But that just goes to show that you kind of have to depend on yourself, So these guys, they have that talent, right? They can go out there and command that kind of salary because they've worked hard for it. Not that you don't work hard as a teacher, but like you said, there's no barrier to entry. Like anybody could pretty much be a teacher if they really want to be, but not everybody can be in the NBA. So if you want a higher earning potential, you have to have better skills and you have to have a business and you have to keep pouring into that.
In the beginning, call back.
Yes, exactly.
So we're going to get into a little bit more about this stimulus thing. And I want to talk about this a little bit. I'm on the fence about whether or not this is good or bad.
Well, we're on the fence together because I don't know that it is good or bad. I think at this point, and a lot of people, just kind of for some context, as I love talking about the economy, I think if you don't have an idea of the economy, you can't really make the right moves with your personal finance. In 2008, when we had that recession, the real economy broke, okay? That's when stimulus really started. Because they have basically stepped in and said, listen, no matter what, like, you're too big to fail. No matter what, we got you. That sends the wrong message. I'm not saying people didn't need that. Of course, if I was working at one of these big banks, I wouldn't want to get fired. So yeah, throw me some stimulus, right? But right. But it's not necessarily good because even if you have like a mom, for example, who pays for their kids no matter what, like they can go out there and crash a car, they get them a new one. Do you have any incentive to do the right thing for what? Like my mom's going to pay my rent. My mom's going to buy me a new car. So I'm about to just live my life. And I think that's what happened in the economy too. So these, like airline industry, for example, a lot of their 95% of their extra money, they went to buy back their own stock. That doesn't really do anything for the company, right? It just makes the stock price look better, but you didn't have any new planes. You didn't hire more people. You didn't do any more research. All you did was buy back your stocks. And then what happens? Fast forward to 2020, we gave them $25 billion. Well, you had that $25 billion. You was just buying back your stocks, right?
Right.
So I don't think this is a good thing as far as, if you keep on giving people things, you're not going to value it anymore. And there's no incentive to do the right thing and to have a good business because you know that you have, Uncle Sam over there ready to give you whatever you need.
Right.
However, I also think that because we have gone this far and we keep on getting stimulus, that if they were to not do it, it would be very catastrophic. Not only for the stock market, because most people don't really care if you're not in the stock market, it doesn't matter. But, on an economic basis, it will be very bad because that'll just kind of lead to a tumbling effect of people trying not to spend as much because they thought they were going to get the stimulus money and they didn't, right? So the airlines were firing people by the thousands because they didn't get their stimulus money on time. And that will cascade throughout the economy. So I don't necessarily agree with it, but I think if they don't do something, it's going to be very catastrophic. And I don't think it's going to be anything that we've ever really dealt with in our lifetime.
Well, that's a lot for everybody to chew on and think about. So I want you to go ahead and check out the Cash Compass. This is Krystal Todd. Make sure you check her channel out. Look at some of her videos. They get more in depth in some of the things we're talking about. I done ran out of time now, so I can't ask you every single thing I want to. So hopefully, I'm about to try to corner you into it right now. Hopefully, I can get you back for a part 2 at some point in time.
Yeah. Listen, I'm here whenever you want to. We could definitely do a part 2. I mean, I could talk about this for hours if it isn't obvious already. So
for sure, that's how you know you love something. It's your real passion.
Absolutely,
that's a beautiful thing. All right, once again, it's your man ChazzEllis. I'm with Krystal Todd from the Cash Compass. I'm going to put a little link in the description box. Y'all know how I do it. So make sure y'all check her out.
Thank you.
Peace.